Hello students, hope you all are well. Let us start our next video on the basis of elements of accounts, part 2, standard 12. The previous video I had completed the 2 questions from your exercise. That 2 questions it was related with the how to find out the net profit ratio. That was the question number 7. One question on the basis of question number 5 and another questions on the basis of question number 6. And net profit ratio you have find out that one, that formula you wrote, net profit after tax by net sales into 100. And that also I have explained in details how you have to find out it. And now we will start one more questions, exercise question, that is page number 247 of question number 8. So let us start the page number 247. I am writing it here, page 247 of question number 8. Page number 247, question number 8, it is not like that net profit ratio, it is another ratio. So let me read the question first, after that I will tell you. From the following information, calculate the current ratio and liquid ratio. So when they said that find out the current ratio and liquid ratio, immediately you have to remember what is the formula for the current ratio and what is the formula for the liquid ratio. I will write the formula for current ratio and liquid ratio. Before that, whatever it is given in the question, let me read it. Stock, debtors, cash and cash equivalent, furniture, bills payables, short-term loan, bills receivables, bad debt reserve, expense paid in advance, creditors and outstanding expense. When you read the questions, that time you have to keep in mind, you have to find out the current ratio, and the formula for the current ratio is equal to current assets by current liabilities. And if it is given in the questions anything related to the fixed assets or fixed liabilities, that you should not consider or should not take it. Stock, current assets, debtors, current assets, cash and cash equivalent, current assets. Furniture is not a current asset. Furniture is coming under the fixed assets. Bills payables, current liability. Short-term loan, current liabilities. Bills receivables, current assets. Bad debt reserve, deduct from the debtors. If it is given the bad debt reserve, then we have to deduct from the debtors. Expense paid in advance 60,000, which is given in this question number 8. You should consider it is not given in the question number 9. Sorry, question number 8. Question number 8 may expense paid in advance, it is not there. That you consider, because I have seen that one. That solutions it is given that expense paid in advance it is not considered. That expense paid in advance is your current assets, that you should add it. So better you should think it is not there in these questions. Expense paid in advance 60,000 is not there in the question, that you consider. Creditors, 2 lakh, and creditors is your current liabilities and outstanding expense is your current liabilities. What we will do? We are going to find out the total current assets, then we are going to find out the total current liabilities, and that we have to write the answer. So first we have to write the formula, current assets by current liabilities. Formula we have to write for that one. Question number 8. Now write the formula. Current ratio. Current ratio is equal to current assets by current liabilities. Current assets by current liabilities. Current assets by current liabilities is your formula, not multiply by 100. This is your formula. First, we have to find out the current assets. Current assets. Whatever is given in the current assets, that you have to add it first. What is given? Debtors. Debtors how much? 2,50,000 plus bills receivables less bad debt reserve and stock and cash or cash equivalent. Debtors 2,50,000, bills receivable 75,000, bad debt reserve 20,000. It will be minus. Keep it mind. It will be minus. It will be bracket I O T. Stock 3 lakh and cash equivalent 1,20,000. If you add it, you will get 7,25,000. This is your total current assets. When I read the question that time, I told you what are the current assets that are coming. Stock current assets, debtors current assets, cash and cash equivalent current assets, furniture is not coming, bills payables current liabilities, short term loan current liabilities, bills receivable current assets, bad debt reserve, it will be deducted, expense paid in advance, it is not there in these questions, creditors current liabilities and outstanding expense also current liabilities. So you are getting total current assets is equal to 7,25,000. Now current liabilities. Current liabilities. Current liabilities you are getting bills payables plus short term loan plus unpaid expense and creditors. This 4 you are getting 60-40. This is coming 60,000. This is coming 40,000. 60, 40, 50, and this is coming 50,000, and this is coming 2 lakh. And if you add it, you will get 3,50,000. This is your current liabilities. So you got the total current assets and you got the total current liabilities, and then you have to apply the formula total current assets by current liabilities, which you are getting 7 lakh 25,000. 7 lakh 25,000 by 3 lakh 50,000. This is what we getting. And 7 lakh 25,000 and 3 lakh 25,000. 3 lakh 50,000 is getting 2.071. 2.071 is your answer. Main thing you have to understand that we are going to find out the current assets and current liabilities. That is most important for these questions. Okay. Now let me find out the next one more question. It is given liquid ratio. Liquid ratio, it is given current assets by here I want to write it here. Liquid ratio. Liquid ratio is equal to liquid ratio. Is that it? Liquid ratio is equal to liquid assets by current liabilities. Liquid assets is equal to current assets less stock. Current assets how much? 7,25,000 is already given. And stock, according to your question, is given 3 lakh. So if you deduct 3 lakh, that you are getting 4,25,000. So answer is coming. This is that 4,25,000 divided by 3,50,000. And you have to find out the answer, whatever it is coming. So very easy, these questions you have to keep it mind. Next, we want to come back for the next question, which is question number 15. Question number 15 is the another ratio. Let us start the next question, which is question number 15. Page number 248. 248 of question number 15. Question number 15 of page number 248, it is given, calculate the stock turnover ratio from the following informations of L Company Limited. 15 and 16 both will do. What they said? Calculate the stock turnover ratio. Stock turnover ratio from the following informations of L Company Limited. It is given in the question: sales 30 lakhs, closing stock 2 lakh 50, gross profit rate 30%, opening stock 3 lakh 50, and purchase 12 lakh. 1, 2, 3, 4, 5. Only 5 items is given. On the basis of that, we are going to find out the stock turnover ratio. With these 5 items, now we are going to find out the stock turnover ratio for question number 15. First of all, you have to write the formula for stock turnover ratio. Stock turnover ratio formula is the cost of goods sold by average stock. Stock turnover is equal to cost of goods sold by average stock. Cost of goods sold by average stock. So, to find out the stock turnover ratio, we have to know that we have to calculate the cost of goods sold and we have to find out the average stock. Average stock, all of you know that opening stock plus closing stock divided by 2. But in your question, closing stock and opening stock both it is given. Opening stock it is given 3,50,000 and closing stock it is given 2,50,000. So you are able to find out the average stock. Average stock is equal to opening stock plus closing stock divided by 2. Opening stock it is given 3,50,000 plus closing stock it is given 2,50,000 divided by 2. It comes 3 plus 2, 5 plus 6, that means 3 lakh. 6 lakh divided by 2. 3 plus 2, 5 plus 1, 6 divided by 2 is equal to 3 lakh. So you got that one. Average stock is equal to 3 lakh. So one point you got it. Next point you have to find out the cost of goods sold. Cost of goods sold according to your question, whatever it is given, on the basis of if I want to find out the cost of goods sold, then only one route or only one formula we have to apply, that is called sales minus gross profit. Because sales it is given it is here and gross profit also it is given it here. Gross profit it is given 30%, but 30% of your sales. So we have to find out the CGS. CGS, cost of goods sold. Cost of goods sold is equal to sales minus GP. Here GP is equal to 30% of sales. 30% of sales is equal to Mala, that is 30% of sales is how much? 30 lakhs. Sales is 30 lakhs. So 30% of 30 lakhs is coming 9 lakh. 9 lakh is your GP, gross profit. Isn't it? So CGS already you have to be able to find out, because 30 lakhs minus 9 lakh. Isn't it? 30 lakh minus 9 lakh is going to come how much? 21 lakhs. 20 lakh to 1 lakh is your CGS, cost of goods sold. Now we have already apply the Here, cost of goods sold by average stock. Cost of goods sold, how much you got it? Cost of goods sold you got 21. Or average stock, how much you got it? 3. That is there. This is your average stock. So 21 divided by 3 is equal to 7 times. Here answer you have tried, don't write in the percentage. Keep in mind which formula you are writing. Some of the students, most of the students, not only some, most of the students they are doing mistakes here. Whatever the answer they are getting, they are writing percentage, not percentage. Everywhere percentage will not come. Sometimes times is coming, sometimes days is coming, week is coming, or ratio is coming, proportion is coming. That you have to remember it. This is the question number 15. Next we are going to find out the question number 16. Let me read the question number 16. Okay? 16 is given. Calculate the stock turnover ratio from the following information of Y Company Limited. Now we are going to find out the stock turnover ratio on the basis of Y Company Limited. Whatever it is given: opening stock, sales, purchase expense, closing stock, purchase and wages. 1, 2, 3, 4, 5, 6. 6 items are given. On the basis of that we have to find out the stock turnover ratio. And here you see the opening stock and closing stock it is given. If opening stock and closing stock it is given, we are able to find out the average stock, because all of you know opening stock plus closing stock divided by 2 is equal to average stock. And second, we have to find out the cost of goods sold. Cost of goods sold formula, previous formula what we applied, sales minus GP. Here sales is given but GP is not given. So that formula we are not able to find out the cost of goods sold. To know the cost of goods sold, we have to find out the second formula. Cost of goods sold का second formula हमको पता था. Cost of goods sold is equal to opening stock plus purchase expense plus wages minus closing stock. This formula if we apply, because everything it is given: opening stock, purchase expense, wages. So second formula for cost of goods sold we have to apply it. So first, cost of goods sold by average stock, that is called formula for the stock turnover ratio. Now, first we will find out the average stock. Average stock is equal to opening stock, you have to write it, plus closing stock by 2. Opening stock, how much it is given? Opening stock is given 2 lakh. And closing stock, how much is given? 150. 2 lakh plus 150 divided by 2, which is coming, this is 350. 3 lakh 50,000 divided by 2 is equal to 1 lakh 75,000. This I am writing here. 1 lakh 75,000. You understand? 1 lakh 75,000 is your average stock. Now cost of goods sold, CGS, cost of goods sold. Cost of goods sold formula, first formula we cannot apply, second formula we have to apply. Opening stock, 18. Opening stock plus purchase plus purchase expense plus wages minus closing stock. This is your formula. So cost of goods sold, opening stock already you know, you wrote it there, 2 lakh plus purchase is given in your questions, 22 lakhs. That is also is given in your questions. 22 lakhs plus purchase expense, which is coming 1 lakh, plus wages 2,50,000 minus closing stock, this is given 1,50,000. This is your CGS. If you add it, you will get it here, that is 26 lakhs. Well, this plus this plus this plus this, if you add minus 1,50,000, if you deduct, you will get the 26 lakhs. So stock turnover ratio, now formula, we got it, because this plus this plus this plus this minus this, you are getting 26 lakhs. Now stock turnover ratio, cost of goods sold by average stock. Cost of goods sold, you got it how much? You got it 26 lakhs. By average stock, 175. Multiply by 100 per 2. 26 by 175, you are getting 14.85 times. Your answer is coming in times. Understand? This is times. So, very easy this chapter. Only you have to remember the formula, and also you have to know how to find out which method you have to apply to find out the cost of goods sold. Sometimes two methods are there which will be suitable for you, that you have to understand, and on the basis of that you have to do this one. That is according to your textbook, page number 248, the question number 15 and 16, as well as the question number 8 of page number 247, so I completed in this video. In the next video, I will do you the question number 17, 18 and as well as the question number 19 also. And after doing this all, like that few questions extra I want to give you, that you have to make practice. Whatever I want to tell you students, this chapter, very easy way you can get that marks, full marks, whatever the marks that is allotted for this chapter. The 14 ratios are there. All this ratio formula you learn it and make practice both from the illustration as well as the exercise. Illustration also one by one, all I have completed, and exercise also one by one, all I will do it. Even though if you do not understand at any place, you can tell me at any time. Okay? Bye. All the best.